Hey guys, this is Nick with the podcast Finesse Your Fitness and Finance and the YouTube channel Fitness Alongside Finance. Today we're talking about mortgage rates and how they fluctuate here in the United States. In the United States, we are actually off of the gold standard, which occurred sometime in the late 20th century, and we are privy to having the Federal Reserve be in control of the flow of money. Mortgage rates in general are the interest rates charged by lenders on a home loan. In the United States, mortgage rates are largely determined by the Federal Reserve and the bond market. The Federal Reserve can affect mortgage rates by changing the federal fund rate, which is the interest rate banks charge each other for overnight loans. When the Federal Reserve raises the federal fund rates, mortgage rates tend to rise as well. Conversely, the opposite occurs as well. The bond market is an important factor which can affect mortgage rates. When investors, such as you and myself and other people, they're essentially lending money to the government and corporation, much on how we've talked in previous episodes. The yield or interest rate on bonds is one of the key factors that determines those set rates. When a bond yield rises, mortgage rates tend to follow. Conversely, the opposite happens most of the time. In addition, the Federal Reserve and the bond market affect mortgage rates, which include also affecting by inflation, economic growth, and the availability of mortgage-backed securities. It's important to note that mortgage rates can fluctuate frequently and can vary widely be based on factors such as the type of loan, the size of the down payment, and the credit score of the borrower. So if you can dissect all of those points and try and get yourself into the best situation possible, like getting a good credit score, making sure all your bills are paid on time, most of the time you can get a decent mortgage rate. It's also wise to kind of shop around, see what you can get from multiple lenders. So that's been this week's episode on mortgage rates and how they fluctuate here in the United States. Y'all have a good one.